The South Korean government has unveiled its planned tax code revision, the very first since President Yoon Suk-yeol took office this year. It's designed to help Asia's fourth largest economy overcome what the country's finance chief has been referring to as a complex crisis by supporting businesses and people's livelihoods. Eum Ji-young has the details.
Revitalizing the economy by promoting growth led by the private sector. That's the crux of South Korea's latest revision to the tax code published on Thursday with the goal of improving corporate competitiveness.
The tax revision has put an emphasis on drastically increasing support for companies to expand their investment and employment. First, the taxation system will be reformed to meet global standards.
Lowering the top rate of corporate tax from the current 25% to 22% is one of the main changes. Also, the government will help smaller businesses by putting more companies into the lowest corporate tax bracket. Also in the spotlight are changes in the real estate taxes. The government is looking to ease the property tax burden for people amid runaway home prices. In South Korea, people or companies with large real estate assets get an extra tax bill for holding properties on top of the standard property tax. For owners of 2 or more residential properties, the threshold before having to pay this extra tax will be raised from the current 600 million won to 900 million won, which is roughly $700,000. Also, for those who own just one home, it'll be raised next year from the current 1.1 billion won to 1.2 billion won, which is just over $900,000. And just for this year, it'll be temporarily raised to 1.4 billion won. The way of calculating property ownership tax will also change. Currently, greater tax rates are applied for owning more houses, but under the change, tax rates will depend on the house price. An expert says this can make property taxes better balanced.
Currently, a person who has 3 houses worth a total of 2 billion won will pay more taxes than another person who just owns one home worth 3 billion won. If we look at it in terms of money, it is not equitable.
Another major goal of the tax code revision is to provide more financial stability for the public amid soaring inflation. The government will reduce the tax burden on those in low-income brackets.
We will reduce the tax burden on people by expanding the range of the 2 lowest income tax brackets. But those earning more than 120 million won will see the amount they can deduct from their income tax reduced.
Chu added that for workers, more meal expenses will be exempt from tax. The limit for tax-free meals at work will be doubled to 200,000 won or roughly $150 a month. The government is also looking to help industries recover from the pandemic. To help the movie industry recover, the government is also making movie tickets tax-deductible from July next year. Those earning less than $53,000 a year can get 30% of their spending at movie theaters deducted from their income tax bill. With all these changes, the government says the tax code revision will result in a roughly $10 billion drop in tax revenue. But the finance minister says the reduction accounts for 3% of total tax revenue, which is within the usual 5% annual rise in tax revenue. The government is going to send the bill to the National Assembly by September. Eum Ji-young, Arirang News.